Hi, welcome to this very quick and short session on what we are seeing all around us. I think since last night and early morning, and all our uh, news flow attention has been taken by what U.S. President Donald Trump has announced in terms of reciprocal tariffs. And I'll just make this very brief. I just wanted to share the thoughts because there is a lot of you'll get a lot of noise around this. There'll be 10,000 people uh, talking about 10,000 different things. uh, at a very broad level, India has been put on a 26% tariff at an overall level. Exemptions are there specific to certain industries, like pharma has been kept outside this ambit of goods. Anyways, IT was outside because it's part of services. Uh, what is interesting is that competition for India for exports, so countries like China, Vietnam, Bangladesh, especially in textiles. So these countries are much higher on the spectrum of tariffs than compared to India. So on a competitive basis, I don't think this is really this is something that is really very, very bad. Uh, my first impressions are that now that this news is has been announced, the uncertainty surrounding policy, what is going to happen, what will be the tariffs be like, etc., that will slowly recede over the next, I think, 6 months to a year. This will be business as usual. People and businesses will adapt to it, and we will get back to doing business and focusing on business. And I think here is where we need, as investors, we need to start looking at the dominant themes that will come out of all this macro policies. And to me, the biggest theme that will come out is obviously domestic facing. Uh, so, you know, when I say domestic facing, what I mean is essentially uh, any industry which is going to be benefited by spending within the country. So, and that spending is going to get driven significantly by interest rate reductions, which I think is going to be coming anytime soon from RBI, from tax breaks that has already been announced, and end of April, so end of this month, first uh, paychecks that people will receive with tax breaks, salaried people, they will see a difference. And also sentiment boost from the upcoming Central Pay Commission. We've seen every pay commission that has been announced has and implemented has boosted consumption economy. So that is again something, maybe not in the immediate term, but in the medium term, these factors are definitely going to uh, strengthen the domestic economy and domestic facing businesses. The other theme is that because of what is happening, especially in the US, and US is withdrawing from the role of the global big brother and as a backstop for providing security. So if you see what most of Western Europe had outsourced their security to the US, and a large part of their energy to countries like Russia with their gas. With what has happened in the last 2 to 3 years, uh, from the Russia-Ukraine war, sanctions, and now US sort of turning hostile to Western European interests, what we are seeing is now Europe again sort of realizing that they also need to be quote unquote Atmanirbhar. So European there's a lot of discussion on setting up uh, uh, across Europe pool of capital for spending on defense. Every country is sort of now looking at increasing defense expenditure, investing in their own power infrastructure. So these are again going to be dominant themes, and companies, especially manufacturing companies, which are European subsidiaries or suppliers to European companies, I think are going to likely benefit significantly. So, in a nutshell, I think we are going to we're going to shift focus back onto businesses, onto a lot slightly away from the macros, again going back to industry by industry in terms of who are going to benefit, what are the quantum of tariffs, quantum of impact for a company by company. And so that's what our focus is going to be. So key takeaways, I think 12 to 18 months from now, I think pharma, chemicals, financials again is going to come into the limelight with potential rate cuts coming in. Real estate going to be a beneficiary. Infra, capital goods, metals, cement. These would be the sectors to watch out for. Personally, I think the next 12 to 18 months is going to be pretty good for money making. So don't get shaken by short-term volatility. It's the nature of equity markets to be volatile. And I think over the next 12 to 18 months, we will get fairly good opportunities to create wealth. With that, that's a wrap up on what I just wanted to share on what is happening on the tariffs and where we should be looking at this point in time. Thank you.